Hey class, welcome to Module 4. Last week we talked about the three different approaches to value a business. I introduced you to the market approach, asset approach, and the income approach. This class mostly focuses on the income approach, which involves you capitalizing historical cash flows or net income, or discounting projected or future cash flows or net income to present value to arrive at the value of the business. Now, as I said, there are two methods in the income approach. You can either capitalize or discount, and then within that you can also use cash flows or net income. I prefer cash flows, which is what I'm going to talk about briefly this week. Net income, normalized net income, is more of an accrual-based figure, whereas cash flows it's true cash, and to me that's the best representation of value for a business. So here, just like last week, we start with net income, but here we reduce discretionary spending. And discretionary spending is basically excessive spending that's not related to normal business operations. Inflated salaries, if there's an excessive salary for a key business partner or executive, then you want to reduce that to get to whatever the going rate is or the going pay is for that particular position. Non-cash expenses, depreciation, amortization, and impairment, those would be added back. Gains, those will be taken away, and then losses will be added back because those are only paper entries on the income statement that represent the increase or decrease in value upon the disposal of some sort of asset. Early debt retirement, I would add that back just because it's not something that has to be done. It could just be at the discretion of the company. They're retiring debt for some other reason, and unless it's business related, then I would go ahead and add that back. And that gets you to normalized cash flow. But again, there are a lot of other things you'd want to look at and focus on whenever making these normalization adjustments. But I'll stop it at that. And this coming week, we will talk about ratio analysis. So in the meantime, let me know if you have any questions.